Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 13th of October. All right, now some serious underestimation of what the market positioning was ahead of the US CPI numbers. The numbers themselves basically came out as expected, right? The CPI numbers, a little bit stronger, 3.7% year on year. That really gave the dollar a firm footing. Now, before I have a look at what's happening in today's markets, because the dollar is sort of rolling over today, but like yesterday, man, it was through the roof. So if I just come back over here and give you a look at the charts, like myself and the rest of the market, this is where sometimes like you can underestimate the potential. Sometimes with CPI numbers, there's a chance for a big move up or a big move down. To me, weaker numbers, man, everything was finished as far as rate hikes in the US goes, and you start to see some significant moves, weakness in the dollar, right? So now, if I have a look here at the reactions here, like the move with sort of numbers that are as expected or just slightly better, massive, right? And so this tells you very strongly, and as I was focusing very heavily on a weak US number outcome, the whole market was, the whole global market, because look at the turnaround here on the euro, like 100-point move to the downside. Same with, or even bigger, I should say, on sterling, a big clean out of, all that positive vibe that was coming through on euro, sterling, Aussie, and even Kiwi for that matter, has like a real big slap in the face. Okay, so when I sort of turned the screens on to check out what had happened, you know what? It's one of those situations where, of course, you wish you could wind back the clock and go, you know what? I should have actually sort of had something on both sides. Now, let me just run you through. I was talking to one of our high performance traders, Mo, and just having a look at the opportunity here, right? What could we have done better, right? So to me, I was geared up for a move to the top side. Fundamentally, it goes with what the central bank had been sort of expressing, that the rate hiking cycle was over. So that's where the easiest trade was. All we needed was weak numbers. Now, the numbers didn't come out weak. They came out on the strong side, and you get a move to the downside. So what we could do a little bit differently, okay, let me just change the pen color there, is, I had a pending order above the market waiting for the number to drop, right? But if we don't get it, and it actually, if you know what, it comes out strong, I mentioned this yesterday, but only sort of like half-heartedly or weakly, saying, you know what, if the numbers are strong, we are going to see a reversal. But I never expected this bigger move on the back of that. So like going forward, you've got to sort of factor this in, because it can be quite demoralizing. You start to get a bit of performance anxiety because you're like, wow, I missed this big move, but why didn't we anticipate it, right? The big move to me, or the best follow-on move, was the top side, right? So if I had a full trade there, say it was, out of 10 lots, I'd go the full 10 lots. Now, the trade on the downside, it has merit, right? If it's got a weak, or if the numbers do come out strong, but the opportunity there for me, it's more like a trade that you get into that you just want to tap into some cash. Maybe I've got half the trade size, 5 or 3 lots, trying to sort of keep it real for most traders out there. So what that does is it gets you into a trade if the numbers are like strong, and it covers you for if the numbers are weak. Okay, if that makes a bit of sense, because basically what can happen is you can end up sitting back going, man, I'm watching this thing move and it's just moving away. Like most traders I spoke to expected it to drop down just a little bit, stall, and then come back and just sort of rest where it was. That's what I was expecting. But when the market gets it wrong, as in the whole market, well, that's when you start to see some serious moves, and you know what? You get a big clean out. Now, what that does for us, it's not the end of the road. What this does is it recharges the trading opportunities going forward, right? So this is like back to the drawing boards when we're over here, and, you start to build that momentum up, and then you go again and again. The technical levels were pretty true, right? These things have diced through some of these levels. Kiwi, sterling, and euro. Dollar index back above that sort of previous support, which was acting as resistance. Dollar Swiss hit the support level, and bounced. Dollar yen's doing its own thing, just cruising topside, and dollar CAD likewise. So anyway, that's where we are. It's one of those ones where you know what? I like to sort of go in aggressively on the number, especially the side that I know that will work. Like, it's an absolute no-brainer. The number there, you know what? Would I always go in with an OCO breakout order? Not necessarily, because I actually thought, okay, if we got a slightly stronger number, you see a slight knee jerk to the downside, it retraces and hits, and euro sits around 106, right? So, but you can only tell how the market was positioned afterwards. And you can see very clearly it was looking for good numbers across the board. Now, when we come into today's trading, or actually while we're there, right, looking at today's trading in general, as I said, there's a bit of a risk on day going on. US equity futures are up, okay? And if I get over here to the FX template, you'll see very clearly, right, there's a sea of red here, right? You're wondering what's going on. Well, there's a few things. It's a bit of a reversal. That move on the US CPI numbers was definitely overdone, right? Massively overcooked. And if we come back into the sort of the overall global markets and you start to sort of work around, okay, what is actually happening here? I need to know what's going on. Come back to your main commentaries here, and dollar firm after US inflation report, one flat despite weak China prices data. Okay, so there's no movement on the one. Chinese PPI softer again, minus 2.5%, I think it was. And that's where we are, right? So, and the shame is, if we had got weaker US CPI numbers, you get the follow through and it sets the tone for the next month. Now we're back into a situation where we're back in the grind, right? We need to keep a very close eye on what's happening with the numbers everywhere, because now all the other currencies are in play, and we'll start to see what happens around their CPI numbers and their key numbers, right? So just coming back across to the calendar, okay, the University of Michigan sentiment numbers are out today. Now, Fridays, for my liking, it's the last stop saloon, right? This is where traders who generally haven't made cash come in and try and make back their losses, right? So just be aware, if that's what you're up to, you're clutching at straws. But this is a number that can add some shape to the dollar at the end of the week. If these numbers come in really weak, well, we're going to see a reversal or a partial reversal of that move we saw yesterday on the dollar. Okay, keep an eye on industrial production numbers. Christine Lagarde speaking. So there's a few things coming out, but to me, the market's probably still licking its wounds after those US numbers. It takes a couple of days for the market, when they get it wrong, to really come back in with a bit of risk and really wolf into it. Now, what did that CPI number? Now, coming back to what we've been looking at for the last week or so, make sure I'm on the right screen here. I am. Okay, so just having a look here, like the equity, the yields, right? And I was talking about this yesterday. Keep an eye on the yields. The yields are up after those stronger US CPI numbers. And I was so fixated on weak US numbers, I keep saying it. But at the moment, price is up. So those yields have come back down a bit. But overall, the yields were higher than they were yesterday. We are seeing, as I said, a bit of a risk-on environment. US equity futures up. Euro, sterling, and Aussie up. Kiwis not doing so well. And most of the other currencies, the dollar is going down, except against the yuan, right? So that's where we are. After that, it's like once we see these big numbers come out, you're often trying to sort of let the dust settle, see where everything's laying, and then sort of make some assessments after that around, like, where's the next best opportunity from here, right? And as I said, coming into the markets, it's going to make next week's numbers a lot more active. To me, it doesn't make the dollar bullish, but it sends it back into a neutral phase. Don't forget that strong US CPI number is against what the Fed have been sort of coming out and saying with regards, we think we're at the end of the hiking cycle. So there's a bit of balance there. I think the market will come back and start selling dollars, but we'll need some weak numbers or some more comments from the Fed to get into that. Then, you know what, Friday, it's a good time to go through and start looking through next week's calendar, and you can start preparing for those opportunities as well. And we've got loads of good numbers across the board as we go. All right. That's all I can give you at this stage, guys. It's, as I said, I'm a little bit disappointed because it's one of those setups. We got good technical setups. We just didn't get the number. Put that into your trading computer get rid of any performance anxiety, and start to look with fresh thoughts in mind for the next big move. All right, guys, have a good one. All the best. Cheerio.